Eric Muathe, Muathe.com, for the weekend of February 20th and February 21st, 2016. Let's take a look at world markets here. We take a look at Asian market at the close of Friday. We see pretty much a mixed picture, but mostly to the downside. You can see here, I guess the biggest mover was Japan, down about 1.4, and the other markets were unchanged to down. KOSPI was up slightly, I believe. It was actually up slightly. So a little bit to the downside on Friday. Take a look at European markets, and we can see here European markets ending Friday's session a little bit to the downside also, as you can see there, a little bit down. Take a look at the Americas, and we can see here pretty much mixed picture to the downside. So down or a little bit unchanged. S&P 500 also a little bit unchanged for the day. So Friday is either slightly unchanged or slightly to the downside. Let's take a look at the charts. Also, let me point out, I'm recording this video with US markets here trading with about 45 minutes to go before the close. So this is how the US markets are trading, with less than 45 minutes thereabouts before the close of Friday. Let's go to the charts. We begin by taking a look at the Australian market, and here we are seeing for the week. And what you're going to see in many of the charts that I'm going to show you across the globe is weekly charts are improving, monthly charts are still a little bit bearish, daily charts are not so hot. So we have here perfect example. We take a look at the Australian market, which is after a nice week still showing good improvement. As you can see here, we recently made a lower low on the weekly chart, while we are showing an improvement on the RSI. That is great, positive divergence. And we can also see that the MACDs right now are showing an improvement. So the weekly charts, as I stated, are starting to look like they could have some upside, and I'll discuss why. I think for now we should still be looking for markets to struggle, probably even go lower, because on the weekly for the Australian market, if you take the line connecting the highs, we have yet to clear this line of resistance. In fact, we came back to test that line at the conclusion of the week. If this is confirmed as resistance in the next couple of days, or maybe in the next week or so, then the next swing trade is going to have to be to the downside. So we have to clear this line first and foremost before we can have any strong upside direction. If you take a look at the daily is coming back to test a declining 50-day moving average, which could be a problem. The last time it tried to move above the 50-day moving average, it failed. That was late January. And we can also see here we are coming back to test the previous short-term break somewhere around here. You take this break line, and which happens to be this break in August, and of course we had a severe drop in markets in August, and we can draw a line from that. So let me change colors here, and so the line here should be right there. And you can see that the market's been struggling every time it has uniform action or a break that corresponds with the same line, like here. Gave us a short-term high there, double top resistance for the highs there, uniform activity above the red line and back below. That uniform activity tends to be a trap, which was the trap there. And now we've come close here, end of January, early February for the highs there, and now we are back to that red line. If we cannot move above the red line, then we have to assume that the next swing trade is down. If you take a look at the monthly chart, this is why I say the monthly charts continue to be pointing down, because they haven't had any positive gain for the month. So we are still looking at this being a fresh break on the monthly chart. RSI still inching towards breaking to fresh 3-year lows, which has been and could continue being a major sell signal. And also we look at the MACDs trading at 3-year lows, which is our major sell signal. So the sell signal continues to be in play based on the MACDs and the RSIs. And that's why I say the monthly charts pretty much in all markets that I looked at have the same type of bearish looking monthly charts with improving weekly charts, while the dailies are very suspect. If we take a look at the Hong Kong market, just want to show you that the monthly continues to be down. And by down, I mean we haven't seen any positive gain for the month. So this is still continuation of the previous break here. RSI continues to press below to 3-year lows. RSI threatening to stay below 38.2, which is a bearish setup on the monthly. And also we can see that the MACDs continue to be trading at 3-year lows. So here's another market that is showing the same type of action. Monthlies continue to be bearish. If you take a look at the daily chart, you can see that the daily is coming back to test the previous topside resistance. If you draw the line connecting the highs, we've come back to test that line. If we cannot move above that red line, then the market should stall. Otherwise, if the market is to continue and trade higher beyond recent highs or recent levels here, just under 19,500, the market needs to break out above that line. So that's one layer of resistance. There's also another layer of resistance, which is the recent break. So this break here coming into 2016, seemingly innocent break, has brought the market off those highs there. And so now we can draw a line from there, and you can see that we are coming back to test the same break point. We've hit that line once before here for a pullback, and now we are back there. That's why I say the charts are very suspect in terms of potential for upside, because those two lines, the red line and the blue line, are coming into play. And if the market cannot move above those two lines, then we have to assume that the next swing trade is to the downside as far as Hong Kong is concerned. If you take a look at the KOSPI, it has the same line of resistance. So the South Korean market is coming back to test that layer there, and also it is coming back to test the 50 RSI level on the daily. And this has been a problem. If you take this, in fact, for 2016, the market has not moved above that 50 RSI level. Every time it hits that with uniform action and stalls, we make a short-term high, uniform action in late December, and back below the 50 level for the highs there. We touched this early February for the highs there, and now we are back here. So clearly, until such a time as we can clear above those two lines, we have to assume that this market is suspect. Keep in mind that we've been unable to move above a declining 50-day moving average. So net, I still think that the markets, irrespective of the nice move off recent lows, I still think that the market generally should be looking to move higher. Now I should point out here is what we see here is we had a slight lower low in price here, and while this was taking place, we had an improvement here on the RSI, which might be the explanation for this nice reaction or move to the upside. Even now, I think that move is now going to have to be severely tested. Again, I'm leaning more and more that the next swing trade in world market is going to be to the downside based on daily charts. If we take a look at China on the daily chart, we come back to this recent break. So you take a line off August lows, extend it out. So we broke through here in January, the first couple of days of January, for this big drop there. And so we can draw a line from the break point right there. You can see we are coming back to test that. If we can't move above the red line, again, here's another market showing that daily charts are suggesting if we show resistance again, that the next swing trade is down. Now I did take a look at the long-term picture for the Chinese market, and we see here on a long-term monthly chart, there's an argument that it's coming back to test this breakout here. So this breakout was very successful in launching the market here in 2014, 2015. And so so this is about 20 years of data. Let's go back and take a look at about 13 years worth of, show you what I'm trying to explain here. So go back about 13 years, a little bit less data. This is a monthly chart, and what I'm saying is we are probably coming back to test this breakout. The RSI broke out here. That breakout began this nice move, and so we can use that for future potential support zone by extending a line out like that. And you can see that on the monthly chart, this actually could be where this starts holding steady for the next monthly swing trade to the upside. So yes, a little bit confusing because of resistance on the daily and the monthly chart showing support. One of them is going to have to play out. So of course, if we can continue holding on this blue line, then the next swing trade on a month-to-month basis is going to be to the upside. Otherwise, if the market cannot hold that blue line and breaks through it, then the next swing trade is down. But for now, if I was to be pressed for a direction, I would have to go with the downside, because we're coming back to test this short-term break level here for 2016. So as long as this is resistance on a day-to-day basis, I think the next swing trade is down. Otherwise, I would be more open to the market moving higher once I see that it has cleared this short-term resistance. Take a look at the Japanese market, and we can see here again we made a slight lower low, and while this was taking place, we had a improvement here on the technicals, which might be the reason why we had this nice bounce over the last week or so. So very confusing. In fact, if you take a look at a weekly, you can see that how confusing this is. We had a major drop 2 weeks ago. Here, huge drop as we moved the weekly RSI below 30.9, and then as we move back above 30.9 this week, we get another sharp move, good for about 8 to 9% for the week. So very confusing action. Net, I think we are still looking at a market that is bearish, because we are trading below a sharply declining 10-week moving average. The monthly chart, irrespective of the recent volatility, continues to point down. All the indicators are pointing down. RSI is cracking below 50, making a move to 3-year lows. So the RSIs on a big time frame continues to be suggesting lower prices, and on the daily, to be consistent with other markets, if I draw a line connecting daily RSI highs, recent daily RSI highs, you can see that we've come back to test this line, which could easily become resistance on a day-to-day swing trade setup. Now, this is not the only market showing that type of daily resistance. If we take a look at the Nifty, we can see here that on a day-to-day, it is coming back to test the top side of this 2015 highs on the RSI. If this is confirmed resistance day-to-day, of course, we'd expect the market to continue pulling back. Otherwise, short-term, that's the challenge for the market, is to break through this short-term resistance. Now, that resistance seems very trivial, but really it's not, because if you take a look at short-term, there was a slight break right there. And this is the break coming into 2016. For the break there, we haven't been back to those levels. If we extend that break level out like that for uniformity, you can see every time we hit that red line with uniform action, we stall. Uniform action rejection, we stalled. And now we are back to this level, which leads me to think that around here, if the market can't move above the red line, don't be too surprised to see that this market continues trading lower. Why do I say that? Is because the monthly chart still is very bearish. As you can see, we haven't seen any positive gain for the month. Monthly prices are still negative. RSI continues to trade at 3-year lows, which is why we've mainly been bearish the last couple of months. We broke through there. We see that the MACDs continue to trade at 3-year lows. So the risk is still to the downside. Irrespective of day-to-day action, we can see that the RSIs are breaking down and giving us the classic sell signal. If we take a look at a 5-year weekly, we go back to the line that we've been watching for potential support. Unfortunately, this line is actually telling us that the market has changed its behavior. If you go back 2011, and let me just repeat this, I'm sure some of you have heard this every weekend, you're tired of hearing that, but just for those who are new, this line is where the market has been holding with uniform action support since 2011 during all these nice lows. Even here, now all these lows did lead to a multi-week, multi-month rally at some point, or at some time. Here also multi-week rally. Even here we had a multi-week, well, I guess this was not very consistently moving the market higher. Now what we are seeing now is here, instead of moving back above the green line for the first time in about 4 or 5 years, this has become resistance. Also, notice the difference. On the way up, the market tends to use the 50 for support like it did here. On the way down, you tend to have that the 50 RSI level becomes resistance. You can see resistance here around the 50 RSI level for the highs there. Eventually you move back below 50 here for that sell signal. Rejection at the 50 line for the highs there. Rejection at the 50 line again for the highs there. Now this is the behavior that marks a market that is generally bearish. And so we can look at this and say, okay, so we are trading below the green line, which has been support. Something has changed in the market. What has changed? What has changed is short term. We are looking at a market that is now more and more responsive to downside pressure. And I think that hasn't changed. Let's take a look at hourly. So let's go to Nifty hourly. I want to show you what I see here on the hourly short term. And I personally have the view that even short term we are still showing resistance, because if you take a look at the most recent down move from here, from this level here, which happens to be this break line. So you follow where the break began, which was here slightly above 50, right there, and just extend it and draw a uniformity line there. You can see that this is easily going to be resistance if the market cannot move above that. In fact, the best way to look at this is go to a 30-minute chart for the Nifty, and what you see here is, take a look at this break coming into late 2015 or December of 2015. Towards the end, there was a break there of the RSI. Draw a line from there. It should look something like that. And you can see that here was rejection for the highs there. And then here, this is also uniform activity, in my opinion, above the blue line, back below it for the highs there. We came close to that line for those highs, and here we've been touching that line. So we can see that clearly if we can't move above the blue line, we should expect the next swing trade to be down. If the market truly has some strength, it first and foremost needs to trade above that. So net we are still looking at markets that, in my opinion, might be probably deemed as being bearish. Irrespective of day-to-day action, I think we are still having a lot of resistance that points to a market that, generally speaking, has a trend, and the trend is still to the downside. Let's take a look at the South African market, and just like other markets, we see that the top side resistance on the weekly chart continues, and until we can clear that resistance, this market should be suspect. We take a look at the daily. The daily is giving us a nice sell signal, which is what we've been expecting based on this previous break line. This break line coming into November brought the market off those levels there, and we can see that if we draw a line from there, that it is coming back to test the recent resistance level. So uniformity, rejection there, nice highs, uniformity rejection there in December, nice highs there, double top here in February, nice highs, and now another resistance, which might suggest that what is happening here makes a lot of sense. And at some point we might get a huge drop on a day-to-day basis, because if it moves below 50, chances are, but when it moves below 50, we should see a huge reaction to the downside. So there is another market pointing down, in my opinion. Also, if we take a look at the Nigerian market, it continues to trade below 30.9 on its monthly chart. And here we are using the ETF NGE. The problem with this ETF or ETFs is you don't know whether they are a true representation of the market or not, but we'll just take it for what it is. So below 30.9 is a bearish market, and you should not be expecting any type of strong move until it can clear that resistance. We can see here that the weekly also continues to struggle as it stays and continues to hold below 30.90. If you take a look at the FTSE, we can see here a little bit of a congestion or a confusion here, because on the top side there's resistance on the weekly RSI, which is where the market did close on Friday. And also we can see that while this is taking place, we are seeing an improvement here on the weekly RSI while prices were making fresh lows. So resistance on the top side, support on the bottom side. At some point we can assume logically that if we break out, that's going to be very bullish, or if we break down, that's going to be very bearish. Keep in mind, all this is taking place while the RSI for now is showing a slight improvement. So the weekly charts, to be consistent with other markets, are showing a slight improvement, and that is true pretty much across the globe on many of the charts that you follow. You take a look at the daily, obviously you run into problems because the daily charts across the globe have been more or less the same. Take a line connecting recent RSI highs and bang, There's your resistance. Also, we are seeing that the 50-day moving average, which is pointing down, is becoming a challenge, just like it was here. All right, and even here and here and here. So right now we are looking at the 50-day moving average being used as a bouncing board, and it seems to be failing to hold. But more importantly is the RSI, which in my opinion takes a look at the sentiment. Here sentiment is coming back, it's being rejected. That's one layer of resistance. And also there's a line that we can draw from here. The red line has been a problem for this market throughout, I guess, the last 9 months or so. So daily charts here again showing resistance. Keep in mind that the big picture continues to be pointing down, because the monthly charts haven't turned positive for the month. RSI at 3-year lows, MACDs 3-year lows, and trading below zero. So the MACDs, RSIs are absolutely bearish, and we can see here the threat of moving below 38.2 could be a problem. Moving below 38.2, more often than not, if you move below 38.2 for the first time in many years, this here being a 3-year chart, if you move to below 38.2 for the first time in 3 years, it's a mouthful. Then that tends to be where markets behave as if they are crashing. And in fact, you can even look at this recent market behavior. This is a huge drop here, and it all happened as the market tested that 38.2 level. All right, so just keep in mind that that could continue to play out to the downside, because the monthly charts net are still bearish in my opinion. Take a look at the French market, and really don't want to bore you with the same analysis over and over again, but you can take a look here. The MACDs and the RSIs on the monthly are still bearish. Let's go to that daily chart. The daily chart is coming back to do exactly what other markets are doing. There was a break here. This break was not trivial here in December, because it brought the market off the levels there at above 49.50. all right, and since then you can see that if you draw this line, we can see clearly that the line has become resistance. The line so happens to be also around the 50 level, and since December of 2015, every time we hit this 50 level and the red line, we stall. Especially when it comes with uniform activity, we know that means it's a sell signal. We did end here slightly above 50. Now the problem is, and the setup here is, if and when you move below 50, you might get a huge reaction or trade to the downside in the 1 to 3% down for the day. So here we are seeing again another daily chart that is pointing to markets that could easily struggle. We can also see this if we take a look at the German market on the daily. And not to be left behind, you can see that we are coming back to test recent break levels. If you take this line, extend it out, I can even draw it somewhere around here. You can see that rejection here at the red line and also the 50 RSI level. Here we closed slightly under 50, which is pretty much around the 50 RSI level. Clearly, if this is confirmed as resistance in the next couple of days, then the next swing trade is down. That would be the analysis in my opinion. If we take a look at the 5-year weekly chart for the DAX weekly does not look that bad, to be honest. You can see this slight breakout here on the RSI. Remember, what we are doing here is using the chart itself to analyze itself, the past history, past behavior. So we are not trying to be too cute. We're just trying to understand what this chart responds to. So you can see this was a nice entry, right? And since then, if I can draw a line from there, which I'll do in a second, which is slightly above, right, above 30.9, slightly above 30.9. So this green line, you can see the market has touched this once before, August of last year, and we had a multi-week rally. And we are coming here and we are touching it again with uniform action, which might actually suggest that if the market can clear the daily resistance, it's a major if and when the market clears the daily resistance that we've been talking about, there actually could be a very strong argument that this weekly chart is suggesting that the next significant swing trade could be to the upside. So let's just bear in mind that even if we think the market is, yes, net bearish, there are some things on these weekly charts that we are discussing here that actually point to a strong market, and therein lies the confusion. Also, we made a slight lower low over a period of months and a slight improvement. So there you have it. The weekly charts do look good, and so let's not be too aggressive on the short side, especially if we are seeing the market go against us. So make sure we have some stops in place, because quite frankly the weekly charts are not as terrible as they might suggest. If we take a look at the Canadian market, and here with about 30 minutes to go before the Canadian market trades, actually about 50 minutes, we can see here that it is coming back to test the weekly RSI top line right there. It's exactly where it's coming to test that. Of course, we know that for this to play out with a bullish move, it needs to break out above that line. So we need to see a strong breakout for this to be valid to the upside. Otherwise, if it's confirmed as resistance, the next swing trade is down. We take a look at the daily. The daily has to be and is consistent with other markets. It's just interesting how these things synchronize themselves. Take this break line. That break brought the market off the highs of April right there. We haven't been back there since then, and we've been using the red line for resistance. I'm not doing it, you are not doing it, the market is doing it, and so we have to respect it. And even here, resistance, double top resistance there, and now the same thing. This line so happens to be slightly below 61.8. So we can see here day to day, the more we continue showing resistance on this line, the more we should expect the next swing trade to be to the downside. In fact, if you take a look at the hourly chart, the hourly, and we draw a line right there, you can see that it gives us nice highs. Resistance here on that red line for the highs there, resistance and rejection there, resistance here for these highs. We touched it again here for the highs there, and guess what? We've gone above the red line and back below it. It's not perfect uniform action, but I think that suggests that around here we could easily stall. Keep in mind, on the monthly, we are still showing a market that is trading at 3-year lows on the monthly RSI, and we see that the MACDs continue to be trading down. So net, this is still risky, in my opinion, to the downside. If we take a look at the BVSP, Brazilian market, here we go. And we can see also, and I haven't done this prior to this video, so I'm just winging it here, but you can see that it's moved off the lows here, but coming back to be consistent with other markets to test that line. Resistance here could suggest the next swing trade is down. Otherwise, a breakout above that line gives that market room to move to the upside. Take a look at the daily, and the daily to be consistent with the previous breakpoint here. That breakpoint brought the market off the highs of May, way higher at higher prices. Draw a straight line, and not to belabor the point, but here again we are coming back to test that line, which has been a problem throughout the last 9 months or so, right? So until such a time as we can clear the resistance on the red line, we should always expect that the 50-day moving average is still showing us with resistance on the 50-day moving average and resistance on the red line. We should still be looking at this market to be net poised to look and go to the downside. Okay, let's take a look at one more, which is the NASDAQ, the US market here, and we can see that if we draw a line connecting recent RSI breakpoints, there was a break here, which became, that break brought the market off these levels. Resistance there on the blue line, and now we are back here. We seem to be stalling. This is consistent with other markets across the globe. That's why I still lean that day to day I'm still expecting markets to be under some type of downside pressure until we can see evidence of moving above recent resistance on the daily charts. Eric Muadh, muadh.com. Be on the lookout for part 1 of my US market analysis. I am out.